Why local stocks are a game you are destined to lose. Pull out your phone. Open that brokerage app, you know the one, with the pretty green and red candles that make you feel like a Wall Street alpha while you're actually just sitting in your pajamas. Look at that local stock portfolio. Does it feel like a ladder to heaven? Or does it feel like you're sitting at a high-stakes blackjack table at 3 in the morning in a windowless casino, smelling like desperation and free well tanks, while the pit boss smiles because he knows the deck has been rigged since before you were born? Here is the cold, hard, unvarnished reality for 2026. If you think buying local stocks, whether it's blue-chip tech, stable banks, or local manufacturing, is going to save your financial future, you aren't an investor. You are exit liquidity. You are the sucker at the poker table who doesn't realize he is the one being eaten by the house. You're trying to build a multi-generational castle on a foundation of melting Antarctic ice. Your safe 60-40 portfolio isn't a strategy. It's a suicide note for your wealth, written in crayon by a system that needs you to stay broke to stay functioning. I'm not judging you from some ivory tower. I've been the chief clown of this circus myself. I remember back in 2021, I felt like a financial genius. I spent 40 hours a week analyzing PE ratios, debt-to-equity charts, and reading quarterly earnings reports like they were the sacred Dead Sea Scrolls. I dumped a massive chunk of my life savings into a local hero tech darling. I told my wife, honey, we're diversified. We're supporting the domestic economy. We're patriots. Fast forward a few months. One CEO scandal involving a spiritual retreat in Bali, a sudden regulatory shift by a politician who clearly shorted the stock 5 minutes before the announcement, and poof, my sure thing dropped 45% in a single pre-market session. I realized then that I wasn't a sophisticated investor. I was just a guy standing in the middle of a Category 5 hurricane holding a paper umbrella and wondering why my socks were wet. Most of us buy local stocks because they feel familiar. But in 2026, familiarity is just a fancy marketing word for a financial blind spot. You're buying rocks painted in gold glitter, praying to the gods of the Federal Reserve that they'll sprout into oak trees. Spoiler alert, rocks don't grow, no matter how much you water them with your tears. Let's look at the macro horror show we call an economy. It's 2026. The US national debt just crossed the $40 trillion mark. That's a number so incomprehensible that if you spent $1 every single second, it would take you over 1,000,000 years to pay it off. Inflation isn't just high anymore, it's a permanent guest that won't leave your guest room and keeps eating all your snacks. When you buy a local stock, you are buying a piece of a company that operates in a dying fiat currency. Let's do the sucker math together. Your stock goes up 9% this year. You feel like a king, right? Wrong. The dollar just lost 7.5% of its purchasing power because the central bank won't stop the printing presses. Then, Uncle Sam walks in and demands 15% to 20% in capital gains tax on your nominal profit, money that only exists on paper. Congratulations, Einstein! You just worked your tail off, stressed over every news headline, and took massive market risk just to lose 2% of your actual wealth. You aren't climbing a ladder, you're running up a down escalator that's been greased with butter. The stock market isn't growing, it's just being reflated by the same printing presses that are turning your paycheck into monopoly money. Now, let's hop on a flight to a tiny village called El Zonte in El Salvador. Meet Carlos. 10 years ago, Carlos was the ultimate victim of the local game. His local currency was trash, and the local stock market was a private club for the 5 families that owned the country. If he saved, he lost. If he invested, he got rugged by the elites. But today, Carlos doesn't give a damn about the S&P 500 or what some suit on CNBC says about market sentiment. He uses the Lightning Network. He saves in Bitcoin, and the World Bank is absolutely livid. They've issued stern warnings, they've tried to cut off international funding, and they've called Bitcoin a danger to financial stability. Do you want to know what that really means? It means Bitcoin is a danger to their ability to tax Carlos through inflation without his consent. It's a David versus Goliath battle, where David has a digital slingshot that never misses and never runs out of ammo. The establishment wants you in local stocks because that keeps you in their walled garden, paying their management fees and suffering their inflation. They hate Carlos because he found the fire exit in a burning building while the music was still playing. Are you going to stay in the lobby with the experts smelling smoke, or are you going to follow the fishermen to freedom? Here is the uncomfortable truth Wall Street won't tell you because it kills their billion-dollar commission machine. 99.9% of stocks are dead assets. They are centralized, fragile, and completely dependent on a functional fiat system that is currently in its endgame. A stock is a rock. It's a liability disguised as an asset by a clever marketing team. Bitcoin is the only seed. It has a hard-coded DNA of scarcity, 21 million units, no more, no less. You can't CEO Bitcoin into the ground with a bad acquisition or a midlife crisis. You can't policy Bitcoin into inflation because some bureaucrat needs to fund a new project. In 2026, while the local stock market is being manipulated by high-frequency trading algorithms and liquidity injections from central banks, Bitcoin is just math. It's a fortress of digital property rights that doesn't care about your local politics or your local currency's collapse. Stop planting rocks in your backyard and acting surprised when they don't produce fruit. You need the only seed that can grow in the desert of a global fiat collapse. Why is the system designed this way? Because local stocks are the ultimate pacifier for the middle class. It keeps you believing you have a stake in the system, while the people at the top, the ones with the keys to the printer, dilute your ownership every time they bail out a failing bank or fund a new conflict across the globe. Look at the data from the last 5 years. Since 2021, the S&P 500 has doubled in dollar terms, but when you price it in Bitcoin or even gold, it's been flat or trending downward. You aren't getting richer. The yardstick you're using to measure your wealth is just shrinking. It's like being thrilled that you grew from 5 feet to 10 feet tall, but failing to notice that someone shortened the ruler by half while you weren't looking. If you aren't outperforming the expansion of the central bank's balance sheet, you are literally losing money while winning the stock game. The realization you need to have today is that the stock market is a permission-based system. You don't actually own your stocks, your broker does, and they owe you a beneficial interest. If the system freezes, you're stuck. If the government decides your local sector is the new villain of the week, your wealth vanishes into a black hole of regulation. The real financial revolution isn't about picking the right stock, it's about picking the right money. When you move your life's energy from local stocks into Bitcoin, you aren't just changing a ticker symbol, you are changing your fundamental sovereignty. You are moving from a system of "please let me withdraw" to a system of mathematical truth. You are taking your labor off the fiat treadmill and putting it into a vault that can't be touched by the grubby hands of the IMF, the World Bank, or your local tax authority. In 2026, the game has changed. The old rules are a trap. The institutions that told you to buy and hold are the same ones dumping their shares on your head while they quietly accumulate hard assets. They want you to stay in the local game because it's a closed loop. It's a hamster wheel designed to keep you just productive enough to keep the system alive, but never free enough to leave it. The World Bank's anger toward El Salvador isn't about protecting consumers, it's about protecting the monopoly on money. When you buy a local stock, you are betting on that monopoly. When you buy Bitcoin, you are betting on yourself. You are joining a global community of sovereign individuals who have decided that math is a better master than politicians. So, do yourself a massive favor today. Close that brokerage app. Stop looking at the flickering lights. Look at those local stocks one last time and ask yourself the only question that matters. Is this my ticket to freedom, or is it just a fancy seat at a rigged table where I am the main course? Don't be the exit liquidity for a dying empire. Join the Future Freedom 360 community. Stop being a voluntary victim in a game you weren't meant to win. Think critically. Plant seeds, not rocks. Because if you keep playing the local game, you're just another soul in the financial cemetery wondering why your safe portfolio didn't save you when the storm finally hit. Why local stocks are a game you are destined to lose. Now you know the truth. The exit door is right in front of you. It's made of 21 million pieces, and it's open 24/7. Welcome to the financial revolution. Let's build something that actually lasts. Let's build for freedom.